So you've laid out a 2-year timeline in terms of integration. What will that entail? What will that look like, particularly in regards to bank closures or branch closures and layoffs?
So the first year, there won't be any closings in the overlapping areas. We made that agreement so that they would have a smooth transition. And thereafter, we will begin the rational closing process because, as you would expect in a case like this, a lot of the branches are literally side by side. So we'll be working, planning for the consolidations, which will occur again about 12 months out. The actual conversions of the systems will occur about 18 months out. But soon you'll begin to see us begin the branding, rolling out our culture to all of our teammates. The branding process is a very elongated process to take advantage of the great names of SunTrust and BB&T and, merge that slowly into Truist, which we're very excited about. So it's a very complicated process, but I think we're going to go very, very well with it.
Yeah, tech increasingly and quickly taking on a larger and larger role when it comes to financial services. You were clear that one of the main reasons for this merger was to be able to spend more on tech to take on both the bigger banks and also all of these fintech entrants that have come into the marketplace. Since then, probably make the argument that the challenge has gotten even harder. Are you going to be able to compete with some of the bigger banks like JP Morgan when it comes to spending on tech?
Well, yes, we absolutely will. And you're right. Was the primary driver of this combination was to be able to have the scale to be able to not only compete, but to be a leader in our industry. It may not seem that way because, even though we'll be the sixth largest, $470 billion, that sounds really large, but we're still only about 1/6 the size of the largest Wall Street banks. But here's the key. In our markets, in the Mid-Atlantic and the Southeast, swinging over to Texas, we're as large as any. We have the second largest market share in our markets, and they're some of the fastest growing markets in the country, in the world. And so it's not really about the national, international scale that somebody like JP Morgan has. It's about scale on Main Street in places that we compete, and we are as large or larger than they are in virtually every market.
So, Kelly, given that fact, and with this deal closing, does that mean that you will continue to be acquisitive or continue to be looking to expand in other regions of the country or do other types of partnerships to expand your reach?
Well, I promise you right now we have our plate full. This is such an exciting opportunity for us. Yeah, so we've got 3,000 branches and 4,500 ATMs and 55,000 teammates, and we've got a lot of work to make sure we do this right. We want to make sure that our clients and our teammates and our communities, all of our stakeholders are really proud of how Truist comes together. So we'll focus on that for right now.
Kelly, you have a pretty heavy concentration right now in some of the faster growing parts of the country. How does the overall economic tone seem to you right now? We're looking at certain, perhaps some cracks, things like auto loan delinquencies going up and maybe commercial and industrial loans not growing too fast very recently. But what's your expectation for the economy, how it does heading into next year?
So I think right now the economy, as we see it, and we get a pretty good view from, all of our clients across our markets. We talk to them a lot, and the market is solid. Companies feel good about their business. They do have reservations about all of the geopolitical issues and trade wars and, things that come up. As best we can determine, it is not meaningfully slowing their investment decisions and their expansion decisions at this point. It could over time, if that were to continue, it could exacerbate uncertainty and create a problem. But for today, I would say that the underlying economy is good. We just saw a fantastic jobs report, 50-year low unemployment rate. Overall consumer and business optimism is very good. This is a pretty good place right now. It's not as robust as some of us have seen over our careers, but it's actually a pretty good place for the U.S. economy right now.
Kelly, how are you planning, or I guess how are you thinking about, how are you planning for the presidential election in 2020? And I ask that in part because there are some Democratic candidates like Senator Warren who have come out and been very critical of this deal.
Well, political expertise is not my strong suit, but I would say that it's going to be an interesting and exciting race. There's certainly some very good candidates. There are some very lively discussions that are taking place. There's certainly some focused on our industry. But I would just simply say that, our industry is at the very heart and soul of the economy. I mean, the banking industry, the largest, the mid-sized, the smallest, we get up every day trying to help the economy grow, try to help our communities be better, try to make the world better. People misunderstand banking sometimes and don't realize that day to day we really are the heart and soul of the community. So if you add up all the loans and deposits and fees in the community, that's what the banking community is. So we're always pulling for the community. We're pulling for our clients. We are really well regulated today. The process we just went through was a very thorough process. And so I think the focus really should be on how to support the financial community so that we can support the broader community and make the world a better place to be.
Kelly, back to the deal itself. Integration, of course, is the key. It's great to write all this stuff down on paper and talk about what's going to happen, but you got to make it happen. How are you changing what you do day to day? What confidence can you give investors from your past that says we're going to get this integration right?
Yeah, that's the key right now because, we do have a deep allegiance to our stakeholders and particularly our shareholders. Fortunately, in my career, I've been through a lot of mergers, as you know. We actually did a merger of equals in 1995. So I had a good expectation of what we were getting into. And to be honest, it's turned out to be better than I thought. Bill Rogers, the former CEO of SunTrust, and I get along great. The teams have come together wonderfully. We, have all of our managers in place today, the first day of business. We have 90% of the ecosystems, the technological systems ready to go, and in terms of knowing which ones need to be converted. So I can predict comfortably that this is going to be a smooth conversion. We are tightly focused on getting our expense reductions. We committed that we think we'll get a net $1.6 billion expense reduction. We are on track to be able to do that, feel very confident about that. And we have not even counted into our metrics in terms of performance revenue generation. Now that we've been planning for about 10 months, we feel really excited about the revenue opportunities across our companies as we combine. And so tight expense control, really good focus on revenue generation, really pulling the teams together in terms of culture, making our brand really shine in the marketplace. It's going to be exciting. I think it's going to be good for everybody. I fully expect we will over-deliver.